All right, we should be good to go here. All right, guys, good morning and happy Monday. Hope you had a good weekend. Hope wherever you are, it's a hell of a lot warmer than Massachusetts. But we'll keep it short and sweet this morning, guys. I got a busy day ahead of me. Got to be in the options room. We got some other live trading. So we'll get right to it here. All right. So, you had some big earnings last week. So we had Google. Google has a pretty huge gap. So good stuff from Google. It's a much better looking daily chart now. So I wouldn't say this is picture perfect, but good stuff here for Google. You get back a little bit of structure. We had Facebook earnings, and obviously Facebook got spanked, so that chart didn't get any better. And then you had the big Zon, and you're back above the 21 EMA, so 13, 14% gap to the upside. So big move down for Facebook, big pops here for Amazon and Google. Doesn't really do the market any good as far as shifting the structure. If you check out the S&P 500, this is maybe decent. Maybe we can call this neutral. It's not bullish. There's no positively stacked EMAs. You have red 10x bars. Still not the best looking structure. So if you check out the Qs, Q tips, not a good structure either. So Amazon and Google and Facebook, they don't do the Qs any favors here. So the point being is you look at the structure of the indexes, and then if you look at the structure of the sectors, like XLK, red 10x bars, no stacked EMAs, the semiconductors, the industrials, the transports, real estate, utilities, healthcare, best looking market. So I think overwhelmingly here, we should have a major focus on trying to short the bounces. And you can keep it simple. I think the IWM. This is I'm drooling to get a short on the IWM. I think you can easily short the Qs just based on structure. So we'll talk about a few potential shorts. But just look at it from this perspective, right? This is the inverse QQQ. So it's the current QQQ just flipped upside down, which offers, I think, an interesting perspective, right? Nice daily squeeze, fires to the upside. So this is certainly bullish. And that pull back to the 21 EMA, that's your buying opportunity. You get the reversion to the mean, you got some stacked EMAs, you got some green 10x bars. We probably wouldn't look to short this pullback. In terms of trend and structure, you buy the dip here, and you look for the trend to continue. So if you can just take that perspective that serves you well in a bullish market, the same thing potentially when things are going to trend to the downside. Short near the 21, take profits on that flush down to -2 to -3 ATR, and pretty much we just try to continue to rinse and repeat here until the day comes where suddenly you got some bullish structure in the market. So we'll talk about a few shorts here in just a second, but in terms of, I still think there's a few spots in the market you want to give consideration to looking for opportunities to get long. Biggest one here, I think, is XLE. Looking at energy here, this is pretty good stuff. Weekly and daily stacked EMAs, green 10x bars. It's a good looking trend. Really good looking trend. And if you look at a lot of the individual stocks in the group, they're all looking pretty good. My favorite right now is DVN. Devon. Good looking daily squeeze, stacked EMAs. You've got a 4-hour, 2-hour, 60-minute, 30-minute squeeze. So here's what I do today. You have your 21 EMA down here around $50, and you also have your 8 EMA. Let's call it at 52. So we're sitting on top of the 8 EMA, and you have a 1-hour squeeze. You've got a 30-minute squeeze. So you've got, a nice 1, 2, 3, 4. You got 4 or 5 lower time frame squeezes setting up on the 8 EMA. And a lot of times that 8 EMA is going to be the launching pad. You're building up all this momentum, all this energy. You tend to look for a nice move off the 8 EMA. So here's what I'm going to do. If it's looking like the 30-minute squeeze, the 15-minute squeeze, If it's looking like they're going to fire to the upside, that's where I think you take your position. You look for a pop into a brand new all-time high. From another perspective, if that 30-minute squeeze fires short and then the 60-minute fires short, you might get your pull back to the daily 21. So I think the lower time frame squeezes here, they offer two sets of opportunity. So keep an eye on those. LNG, basically the same thing, good daily structure, and you got a bunch of lower time frame squeezes. There's a 2-hour, a 60-minute, a 30-minute. So they could fire off the 8 into a brand new all-time high, but if they fire short, I think you jump in down there to 21. So DVN is solid. LNG is pretty solid. I think FANG. They all kind of look similar, right? XOP, BUK. So you can pick your favorites there. But in terms of trying to get long, got a good structure here. You don't have it in the semis. You don't have it in. You really don't have it in too many other spots. So along with energy, XLP is not too bad. Again, early buy signals here, which means the structure's improving. You've got some stacked DMAs, and if you take a look inside XLP, he's got a good daily squeeze. Coca-Cola, nice daily squeeze. You got Dr. Pepper, good looking daily squeeze. There's Procter and Gamble. Good structure here. So my thinking is, I'd rather take the higher probability setup versus, hey, NVIDIA is one of my favorite stocks. Let me try to call for a bottom here. If you look at the inverse of NVIDIA, we wouldn't want to get short right now. You don't want to short that pullback, right? You're going counter everything. Counter trend, counter structure, because you're at the 21 EMA, and momentum. From my perspective, getting long here, not the highest probability trade. So when you look at Pepsi, it's not as exciting, or Procter and Gamble, or Coca-Cola, or DVN. But that's where you got the pretty colors, the pretty charts. So keep an eye on energy, keep an eye on XLP, and maybe as a third alternative, a few of the financial names here, a couple of the banks. So in terms of XLF, this is just kind of neutral at best. This neutral 10x bars, there's no stacked DMAs. There is a good looking weekly squeeze. So this is maybe, let's just call it neutral. We'll be nice this morning and call it neutral. But inside of the financials, there's some pretty good looking setups. One of them being Wells Fargo. And I wouldn't chase an entry up here, but if this were to pull back to the 21, right around 54-ish bucks, I think you got a good entry. You got all the green lights up here, weekly, daily, stacked DMAs, and green 10x bars. Shift of momentum on the histogram, and you're getting buy signals. So I have, like Google, for example, is one of my favorite stocks, right? For whatever reason, I don't have any buy signals. I'm probably going to go with Wells Fargo. Wells Fargo is pretty solid. Big Chucky Schwab here. Got some early buy signals, pretty similar structure. So in terms of potential opportunity to the upside, there's a few groups for you to focus on. Energy, with names like DVN, FANG, LNG. I think XLP is solid. This gives you names like Pepsi. Keep in mind you got earnings coming around the corner here, but Pepsi and Procter and Gamble and Coca-Cola and Dr. Pepper. They're not the sexiest names on the street, but good-looking setups. But in terms of the rest of the market, until something changes, it's a short the bounce kind of structure, in my opinion. So the number one bounce I want to short here is going to be the little fellas. We're going to pick on the little guys here, the small caps. So here's what I'm looking for. Right, a little bit of context. Big weekly squeeze, support around, let's call it 210. So you got support, support, support. So as you're coming towards the bottom end here and you're in a weekly squeeze, you're building up all this energy. And when it tries to crack through that bottom end, it's trying to release that energy. So it fails, it fails, it fails, it fails. 10, 12 months later, you finally start to crack. Okay, so all that energy that's getting pent up here since really February 2021 up until February of this current year, finally starting to let some of that energy off. So what I would like to see, if the market's willing to play ball here, if we could get a bounce back up towards 206 to 210, pretty much just make it bounce back into previous support. And what I'm looking for is previous support acts as resistance. Then I'm looking to short the thing. So we'll see if we could get a bounce there. Let's check out the futures real quick. We'll see. But ideally, that's where I'd like to short it. So 206 to 210, there's my entry. My exit on a short would be a move back above the weekly 21. So the way I'm looking at it is, hey, if this weekly squeeze is really going to fire short here and it's going to get ugly, it shouldn't start to close back above the 21 EMA. I think at that point, at least in the short term, the timing's a little bit off here. So if we can get a bounce back above 218, 220, and we close above the weekly 21, that's where I toss the trade aside. I take the exit and then move on. And then in terms of a downside target here, I look for this to roll over, break that recent low. And I don't really have any level of support here until like 170. So I would look for a flush all the way down to 170. So from this perspective, there's a few different ways you could structure a trade here. You could do debit spreads. My preference is going to be, if we got some good premium here, and if you look at the March expiration, which I think gives you plenty of time, if you look at the March 18th expiration, call options, again, my thinking is we're going to be trading down near 170 in the next 4 to 8 weeks or so. So if you look at the 180 calls, the 185 calls, you've got some big premium here. If we're going to flush down to 170, I'd like to have some of that premium coming into my pocket. So here's what I'm trying to get going. I want to sell the 185 call. I'm going to buy the 190 call. And if we can bounce into that 208, 210 level, I think we should be able to get the spread for about maybe 4.25. Going for about 380 right now. I think we could get it for about 4.25. Really, $4 or higher. It's pretty good stuff here. But if we could get it for 425, great risk reward. Per contract, you're risking $75 to make 425. What's a little bit more important to me, though, so say I take this trade this week. Let's try to get a sense of how's this trade looking a couple weeks from now. So if we're going into February 18th, I sell that call credit spread. I got it for 425. Let's just say a week or 2 weeks into the trade, it's bouncing back towards the weekly 21. In other words, it's time to close the trade. Trade's not working. We're down about $70 per contract. If we can flush to the recent low around 190-ish, we're banking about 100 per contract, but the target into 170, you're making about 300 per contract. So when I see a setup like this, and I think we're lining up for a big move, I don't want to do a out the money, sell the 220 call credit spread, risk $4,000 to make $1,000. I think there's a couple times per year when things really line up. So what I'm trying to do is risk maybe 5 to 10% of my account. If the trade works in our favor, you're getting a really nice bump going. 10, 15, maybe 20%. But that's what I got for you guys this morning. Based on structure, not opinion, I think that IWM weekly squeeze has got a lot more downside. I think the QQQ weekly squeeze could easily find itself down here around 320. So both of those I'm trying to short on bounces. And of course, if those roll over, then probably the S&P rolls over. And there is a weekly squeeze here as well. It just has a bit more structure left to it than the QQQ and the IWM. Neither of these have stacked EMAs or the green 10X bars. The S&P is trying to fight the good fight. So that's what I got for y'all. That is what I got for you. Energy, XLP, maybe a couple of the financials. But I think in this market, keep things a little bit short-lived. So what I'm trying to do a little bit more here is, find that good-looking daily structure, working the same checklist, looking for the same criteria. But then when something's lining up here at the 21 EMA, I'm going to dial it down to like an hourly chart, see if I can get an early entry, and see if I can make it a bit of a quicker trade. So last week we're getting long DVN around, call it 51, 52 bucks. We're selling our calls back up here at like 54 and a half, 55 and a half rather. Keep it nice and simple, right? I think the higher probability move in this kind of market is going to be about 2 ATR to the upside. So get your entry, take your position, take the profits, wait for the next pullback, take an entry. Just continue to rinse and repeat because I think, as good as energy might look, the indexes look pretty sketchy here. They're a little bit suspect. So if the S&P pukes it up and the IWM pukes it up and the QQQ pukes it up, you don't want to be looking for these, crazy above average moves. Because, yeah, energy looks pretty good here, but if the whole market really starts taking a beating, energy still runs the risk of getting caught up in the crossfire, so to say. So hopefully that makes sense, guys. We'll be live again on Wednesday, and then Chandler has got you on Thursday. And we got a few videos coming out this week. I think we actually hit 10,000 subscribers yesterday. So I don't know if I get a plaque in the mail or anything like that, but maybe I'll make one. But if you guys got any questions, let's do it. Let me see, 9:03. I can answer a few questions here real quick. Yeah, Anders, good question. So there's a few tools we have here at Simpler. The Moxie being one of them. My buddy Sam, he just came out with an indicator. Next couple of months here, I'm looking to kind of dive a little bit deeper into those things. The voodoo lines. I'm fortunate we got a lot of good tools here, and I'm surrounded by a lot of smart folks. So the next few months or so, I'm really looking to dive a bit deeper into some of those because I'm always looking for edge. Now, I basically trade one setup, typically looking for the same entries and the exits, but the tools I like to focus on, they're all about edge. So the squeeze offers the biggest edge, at least for me. But then the moving averages, the Keltner channels, the stacked EMAs, the green 10X bars, or the 10X bars in general, they all add a little bit of juice, a little bit of edge. Yeah, Tim, we're going to try to get that posted. I'm not sure what's going on there, but let me see what time is it. I'd say give us about an hour or so. Cobra, how do I think of Ford? So I was looking at Ford after earnings. What I was looking for was, can we hold the weekly 21 EMA? Because in terms of, the context of the trend, big weekly squeeze fires long. Whoops. Right, big weekly squeeze, reversion to the mean. So you're just kind of getting that stair-step action going, which is, characteristics of a good, healthy trend. You make a good push, you revert to the mean, you consolidate, party continues. So you still have pretty good structure here. What would I do for now? I would look for Ford to start to close back above the weekly 21. There's a little bit of cleanup to do here. Get a lot of bearish momentum on the daily chart. Get your red 10X bars, no stacked DMAs. So I think you want to anchor to the weekly 21 around, 19 bucks as that's what you want to see as key support. Because I'm looking to trade Ford as well. So the process for me here is, can we just kind of start to take back support first and foremost? Because otherwise, in the short term, if we don't quickly get back above the 21, we kind of run the risk here to just start chopping back between +1, -1. So all of a sudden, Ford's going from $16 to $20 to $16, which you can still trade, but in terms of the trend continuing in the short term, let's get back above the weekly 21, and then let's start to clean up a little bit of that momentum. Shift the histogram. Let's get some green 10x bars. Let's hit the stacked EMAs. If we can have a daily chart with much better structure back above the weekly 21, that's where I'm personally going to start to look to sell some spreads. Because looking at the weekly chart, it could start to get a little bit sloppier than I think we'd like, or it could quickly kind of get back on its own 2 feet here and try to get something going. So it's a structure I'm going to pay attention to. Hells yeah. I'm Dave. SPOT puts. Shorting Joe Rogan? We can't short the Rogan. It's a shortable setup. Negatively stacked EMAs. So just look at the inverse. I would have really wanted to have bought that dip. There's stacked EMAs. There's nice momentum here. There's good trend. If I wasn't able to buy that dip, I'd be sitting here waiting to get long the next dip because of all that good-looking trend. So if we take the current Spotify chart, I'm with you on the structure here. I'd short it. Maybe at the 8 EMA, ideally back at the 21. And then I'd probably exit the trade then to close back above those moving averages. So based on structure, that's a short there. That's a short. Clint, there are times where I'll use price levels. So for example, right now, that IWM weekly chart, I'm looking for a bounce into my weekly moving averages, but more importantly, I'm really looking for a bounce into that 208, 210 level. I really want to get that bounce into previous support and then look to short it there. So it just kind of conveniently lines up with that weekly 8 EMA. But even if it didn't in this instance, I'm going to take that price level of previous support. It's kind of a trade to anchor to. Nacho. DUK is pretty solid here. Nice weekly squeeze. Good structure. Histogram starting to shift. So typically it's trying to get something going here. Once a histogram starts to turn, there is earnings on Thursday, so keep that in mind. It's kind of the only downside, in my opinion. Not too much time left till earnings. However, what you could do, so if you go with this Friday's expiration, the implied volatility on the calls, it's not that it's going to continue to elevate into the earnings announcement. It does to some extent, but for the purposes of a potential pop here into earnings, the premium just holds. Meaning maybe you buy a 105 strike call and you pay $2 for it. You don't got to worry about theta, at least not until the earnings announcement is over. So if you're looking for a short-term pop, the implied volatility going into earnings could work in your favor here as far as buying a call. And I think if we're trying to work a shorter-term pop here, dial this down to like your hourly squeeze. The hourly squeeze can get back above the hourly 21. If the hourly chart can get positively stacked DMAs, could get a nice pop there. Otherwise, this is a perfect entry for a nice swing trade. It's just for me, I'll wait till earnings is done. And I think Coca-Cola is kind of the same thing. Great looking chart. You do have earnings coming up also this week. So that call premium is going to hold. So you could take your 30-minute squeeze, wait for that to look a bit better. You could take the hourly squeeze. It's just in this instance, you don't want to sell the put credit spread. So this is one of those times where there's actually to your benefit to buy the call. You don't got to worry too much about the premium decay, and it actually could do you a favor give you a nice little bang for your buck. After earnings, I'd like to buy in. He pulled back to the 21. Really, really good looking chart. Hey, good morning, Robert. Thoughts on Mo? Good call out. Very nice chart. Daily 4 hour, 2 hour, 60 minute, 30 minute, 15-minute squeeze. Good structure, stacked EMAs. I like it. Nothing bad I can say about it. And I like the fact earnings is already done and over with. And I like the fact you've got the all-time high up here around 52 and change. I'd like all that, Robert. Good setup. Very good setup. Very good setup. But listen, guys, I got to be in the options room here in 4 minutes. So I'm going to cut you loose, but hopefully you found this morning helpful. As always, I appreciate you spending a good 30 or so minutes here together. Go enjoy the rest of your day. Trade smart, be patient, and I'll see you again, same time, same channel on Wednesday morning.